So what we're going to be looking today is reviewing our strategy. All right. So I've done last week, I've done a little bit on a rush, I would say, because I was, the first 30 minutes I've talked about macroeconomic, and then the last 30 minutes I've talked about this idea that I had. And then today I'm going to try to, break through all the points and how we're going to actually trade and how we're going to actually analyze the market. And then from there, we're going to start to look at the opportunities on the market. And then after we have a look at opportunities, we're going to be looking at some sort of economic indicators, like some fundamental indicators. Okay. So before we go any further, guys, I'm going to leave everyone, I'm going to be silent for a minute or so everyone can read this risk disclaimer, and we go from there. Okay, done. All right, guys, let's get started. Let's get it started.
Yeah.
All right.
Yeah, we're going to still learn about this.
Let me put this to the side.
So,
all right. So first topic is reviewing your strategy. Okay. So the link of this spreadsheet is on the it's on the Telegram. Okay. If you've not yet looked at the Telegram, I would highly recommend you to have a look in there. I've sent the link to everyone to be using the same strategy, the same spreadsheet as me on the Telegram. So if you click in there right now, you will be able to see me moving my mouse and everything on your screen. Okay, so we can see already one people is in here. So we have someone here already. So that's pretty good. All right. Okay, so basically, this is the portfolio we're going to be using, a $100,000 portfolio, but we can make it less if you guys prefer. We can make more realistic. I was thinking about $100,000 is definitely really good money to start, but not all the people here may have that money just to put in a trading account and just trade that. So what I was thinking of is maybe a $5,000 account or something around those numbers. All right. So let me know, guys, what do you guys think about the portfolio size? What sort of portfolio size would you guys be looking to trade? Usually what's the size of your accounts and etc. Between 1,000 to 5,000, between 5,000 to 10,000, between 100 to 1,000. What are the spot? I will be looking to do $5,000. Okay, so portfolio size would be 5,000 US dollars. Okay, so I've divided this in a few ways. I've divided into the pair. Okay, I've divided into the entry price. I've divided into the risk we take into the position size. Okay, the stop loss. What's the price of the stop loss, and the take profit price as well, and the close position result, and the comment. Okay, so that's pretty much it from the Excel, and now we're just going to start to build it up from the trades. Oh yeah, I forgot one thing. The date. Perfect. So this one is a so what day was the last 13th? It was on the 13th of 11/2024. 13/11/2024. That's what the first trade we had. I'm going to be using 12, so it's easier for everyone to see. And I'm going to be looking into bold this and put into some color. Perfect. That's the portfolio size. 14. Done, and done. There you go. Perfect. So we have the pair, the date, the direction, if it's short or long. We have the entry price, the risk percentage we're taking, the position size, the stop loss, the take profit, the closer position result, and the comment. Now, the risk, all right? The risk we use, it can be different from everyone, all right? what I recommend is between 1 to 3% maximum. All right. How do I check if it's a good trade, or it just depends on the position type. If it maybe the fundamental lines up, then we could do another 1% risk. If the fundamentals don't line up, maybe we could do 1% risk, maybe 1.5% risk. Just depends on that. Now, the position size is how many lots are we entering that position. Stop loss, the stop loss price, take profit price, and then once we close the position, we're going to have a result, either positive, negative, or break even. Then we can add it here. Now, one thing that I'm thinking is the closed position could have something else. Could have the swaps, because we will have big positions, right? We will have for a long length. In terms of big positions, I mean length. All right, so we're going to have some length for the market. So we're going to have, let's say, maybe a 2-day, 3-day length, or etc. So we're going to be looking to that, and we're definitely going to have swaps. If we have ACY swap structure here, you guys can see it, Cass. So let's say we have euro dollar. All right, sorry. So euro dollar right now, we have a swap. This is the MetaTrader 5, okay, guys? Very easy. If you are on your MetaTrader, go to your MetaTrader and click Ctrl U, and then it's going to open this page. So if you run down here, you can see the swap for long and swap for short, okay? Swap for long is $6.17, and swap for short is 98 cents, okay? So if you short every day, you get paid 98 cents on top of one full lot. And if you long, if you short, you get paid 98 cents every one lot. And if you long, you get charged $6.17 every day for a full lot. So if you're using 0.5 lots, it's pretty much half of that. So $3 and around to $3 and maybe 8 cents. Sorry, 6 cents, 6 cents and a half. So $3.06. Okay, that's how much you're going to be charging. And then on Wednesdays, you got triple swaps, as you can see. Okay, so Monday, Tuesday, normal swaps. Wednesday, you get charged a triple. So let's say if this is $1, you're going to get paid $3. And this one, you're going to get paid triple. Okay, so 18 pretty much. All right. So we have to count in consideration those types of costs. Okay, this is the cost of doing business. All right, this is how the broker makes money. They have to charge us some sort of thing, right? Okay, so the swaps are there. Swaps will be only shown here if it's longer than the duration of the trade is longer than a day. So if, let's say, the duration of the trade is 2 days, we've opened up on the Monday open of the market, Monday morning, and we're closing this trade on Tuesday night. We're going to be charged from Monday to Tuesday. We're going to be charged one swap fee, and then from Tuesday to Wednesday, we're going to be charging another swap, and then Wednesday to Friday, and then Friday to Saturday. Okay, so that's pretty much how we go for swaps, and then we're going to have the close of position result. Okay, and then the comment is where most of the important part is. Okay, I was thinking of actually type here, but it's much better for us to take a screenshot and see what is happening on that time, and then we've just take that screenshot and put in here. So if we come here next month, we know how the position have been progressing. Okay, and you guys will see that this position got triggered. This position was a short position, and we've just got triggered. Just I think it was yesterday, Monday. Yeah, Monday. So we've got triggered on Monday and the position is running on profit right now.
No, that's fine.
Okay. So we've been to some drawdown right here, but now it's on profit. Okay. So basically this is one thing. Now, what's the strategy actually composed to? So I've done a little thing. Let me just put it bigger so everyone can see it. But basically the DXM Forex spot strategy, it exclusively trades the Forex spot market. Okay, we're not trading futures of Forex. We're not trading indices. We're not trading any other thing. We're trading mainly spot FX. Okay, what does this spot FX mean? Does anyone know? That's a very tricky question, eh? No one knows. I'm looking at the chat right now. No one knows. Okay, interesting. Not a problem. Okay, so basically, spot FX it refers for CFD but not future. So Tish says CFD but not future. Yeah, you could say that. Yeah, you could say, but you know, it's more. So basically, spot FX is spot foreign exchange. It pretty much refers to trading trading the currency on a immediate delivery. So, you know, maybe 1 to 2 days. So basically it's the most common way of trading Forex, okay, to trading in the market. So you get an immediate settlement. So basically, as Satish said, on the CFD. So if you click in the CFD right now, if we go into the broker and click buy, you're actually buying it. Okay, you're not waiting for the currency to come to you by mail delivery or something like that. And the spot actually comes from the spot rate, okay, which is the exchange rate at the time of the trade we do. Okay, so the rate, of course, is influenced by, you know, factors around the world or interest rates, economic data, political stability, and geopolitical instability. But mainly what you need is the spot of the day. Okay, and you have no future obligation. So unlike like the future future Forex or forwards, the spot trade do not involve the contracts to trade it on a later day. Okay, so the simple a real-time exchange and one of a currency for another.
Yeah.
Okay, so that's pretty much what spot FX is. Now, targeting both majors and minor currencies. So we're going to be targeting the major currencies. Okay. So if you, again, open the Contrarian on your MetaTrader, you can come to here, Forex, and then majors. These are all the major currencies: Euro, Australian dollar, CHF, Japanese yen, Canadian dollar, the pound as well. These are the major ones. Okay, the six big ones. The crosses are like Euro New Zealand, Pound New Zealand, New Zealand CAD, New Zealand yen, Aussie New Zealand. And then the exotics is something we're not going to be trading, is emerging currencies. Okay, so we're only going to be trading major and crosses currency pairs. Pretty much it leverages the market sentiment tool on FinLogix. Okay, this tool here, we're going to get there in a second. And I've done, you know, I've nicknamed that on DXM. I just like the name. It's just my strategy name. You can call whatever you like. To guide directional buyers by consistently positioning against the majority sentiment. The key components of the strategies include the risk management, of course. So the risk management employs the average true range, the ATR, multiplied by 6 times to define the stop loss levels. So whatever it says on the ATR, you can multiply that by 6, and that's where your price of stop loss will be. Okay, I've done a video on that. Let me send the link of the playlist. I've sent that on yesterday's, but I've done the video on that, right? This one. So if you guys see ATR times 6, So I've done the video. I'm going to send to everyone on the chat right here. ATR loss video. Okay, I've sent on the chat. That being said, we're going to be using the ATR 6 times the ATR to define stop loss level, ensuring a calculated risk exposure. The profit target. Okay, so basically the take profit. The take profit is maintaining a minimum 1-to-1 risk reward ratio for take profit. Okay. The entry points is basically the whole sweet thing of the DXM. So basically, we're going to be using technical levels like support and resistance, and as well as the Fibonacci retracements, and basically to identify the high probability entry zones. So lower drawdown. Okay. But always aligning with the contrarian principle, entering on the opposite side of the market majority as indicated by the DXM. So basically indicated by the sentiment tool on FinLogix. So that's going to be so pretty much like that. Okay. So that's the strategy description. I'm going to send here on the chat description of the strategy. Someone say that Aditya say, hey, Luca, don't you think 1-to-1 is very small? Yes, I completely agree with you, but that's exactly what I mean. 1-to-1 is a minimum. Okay. It doesn't matter that it doesn't mean that you need to go lower than this. It means that you can't, it doesn't mean that you have to go, it doesn't mean that you can't go over than this. It means that you can't go below that. Okay. So 1-to-1 is the bare minimum of the risk reward. Okay. I would even suggest 1 to 1.8. Yeah, that's the actually bare minimum. All right. So let's use 1 to 1.8. Perfect. So that's it. The strategy description will always be here, so everyone can come. Oh my God. Everyone can come and have a look on that. Okay. There we go. Do a zoom out. Oh, perfect. All right. So now that being said, any questions around that? No questions. Okay. So let's move ahead. So how do we get this FinLogix sentiment tool? All right, that's the big question. Is it paid? How much is it going to cost you? It's probably going to cost you $100 every month, right? It's probably going to cost you maybe 150. It's probably going to cost you have an account with us. You have to fund your account with us. Well, that's all wrong. It's not going to cost you 1 cent. It's not going to cost you anything. All right. What's going to cost you is you're going to have to go to Google and type it up, finlogix.com. Come to tools and go into market sentiment. And I'm going to do it even easier for you. I'm going to send the link into the chat. All right. Perfect. That's where we're going to be getting your data to trade. All right. So Forex market sentiment, that's where we're going to be trading. We won't be looking to trade commodities and we won't be looking to trade indices. I was thinking about trading commodities, but it's like, no, because it's, you know, it's very volatile and it's much better to trade only Forex than trading commodities and indices. But if you guys want to trade on your own, that's completely fine as well. You can trade on your own. Okay, I'm not saying that strategy won't work. Yes, it will. But I've proven and track record on here, the Forex, on the Forex market, spot FX. Okay, so let's have a look on our first trade. We've done a sell on the 13/11/2024 at the price of 83,500. So we've placed a pending order on the short side. and we've placed at a we didn't done market execution. We've done a sell limit on the price of 83,504. So let's have a look at the market. So 83,504 is right on this blue line that I'm gonna change to black right here. And the stop loss price, so on the 13 was here, right? Yeah, on the 13 was on Wednesday. The market was trading somewhere around this level. And I was like, look, we may wait for a bit more pullback on this 60 level, okay? But I was happy with a 50% already. So I've placed a sell limit on the 50% retracement of Fibonacci and on a strong resistance area, okay? As we can see right here, okay? So the market, yes, came to that area, tapped in today, and now it's coming back down. Now, if we go and add the average true range, where it is, oops, sorry, average true range, we can see it's on the 14. That's pretty much good. We can see that right here. Have a look at those little numbers here. Most likely you guys, probably you guys will see, but have a look on here. On the 13, that was on 144, okay? 144 to 150, around 150 to 144. So what I've did is I've took my calculator, okay? And then it was 144 times 6. So times 6 give us 864 points of stop loss. So that's where our stop loss should be. So 800, and so let's call it the 900 points. So 90 pips from our entry point. Okay, so our entry point is right at 83,504. So let me get another calculator. So 0.83504 plus how much the stop loss? 900, we say, right? So let's go for 900 plus 900. Oh no, sorry. 0.83504 plus 0.00900. 84,404. So that's where our stop loss should be, okay? 84,404. So it should be around here. I don't think we need to put it all the way up there just because we have a top on here, okay? So this will act as some sort of resistance on if the price comes to go there. So yeah, that's pretty much it. And then on this trade, I've done a 1-to-1. But we can definitely extend the take profit later when it comes to time. Okay. Now, the screenshot I've took on that day, the majority was on the long side. Can you see here? So majority was 54% of the people was longing. And as we can see, they've made some money. But now, if we come to here, and you look here, only 20%. So what I'm expecting right now is that, yes, all of those people will become liquidity, and we have plenty of liquidity on bottom of those trends that we're going to be, the market will be, you know, swiping through. So now that they've squeezed everyone, they will be dumping all the big short positions from somewhere around here, or maybe from even a little bit more to the top. Now, this is the trade we've done. Okay, euro pound is running. Okay, euro pound trade is running. Any questions on that? Is it too clear? Is that everything good? Someone asked a question here. Suleiman have asked a question. What do you think about UK CPI? We're gonna get there in a second. But this is showing to me that you don't watch YouTube videos, because I've done a YouTube video today talking about the UK CPI. But we're going to get there. We're going to discuss the UK CPI very soon. It's the next topic. All right. Now, let's look to some new opportunities in the market. What are we thinking about GBP JPY? Let's have a look at the chart. GBP JPY. GBP JPY on our strategy says long. Look, this is a very good opportunity to long, actually, because we've had this huge move up. Okay, we've had this move up and then down and then up and then down and now probably up again, right? So another way that we can measure this is if we look here on the Fibonacci trend extension from here to here to here, let's count this as a bottom. We would be looking around this level of take profit. So there's definitely a good opportunity for us to catch this trade. That is a good one. Okay, let me get this out. What's the ATR saying? Let's have a look. So ATR is showing to us 14 at the moment, 140 at the moment. Sorry, 140. Let's go for the 1 hour time frame. It's better. Sorry, it's showing 275. Sorry, 275. And right here we have, it's beautiful. That's a really good trade. That's a really good long trade. Probably going to catch this one. So let's say I'm going to buy it here. My take profit will be at 203,600. And my stop loss will be just at, let's see, where's my calculator? All right, so 405 times 6, 2,430 points. Okay, so 243 pips. So right now we're trading at 197. Let's call 197 is where our entry point is. So 197, 196. Yeah, that's 1,000. And then 195. That's another 1,000. And then 400 points down here. So our stop loss should be at 104,500. 194,500. 194,500. Perfect. There we have a trade. Let's see how. Yeah, definitely is a 1, 2, 1, 2, 3. So basically, it's a 1 to 2.5, right? Nice one. Let's go for GBP JPY. JPY today is the 20/11/2024. We are long at the entry price of, let me just get these.
Yeah.
Sorry, guys. Luckily, I could mute. Stop loss is at 10945. Yes, Nathan. What's going on?
Just a beautiful man. Just admiring you.
Oh,
The
right.
sun behind you.
Oh, thank you, man. Nathan came to my desk saying that I'm a beautiful man.
Bobby Jones.
TP, the risk is 1%. I'm sorry. Actually, I'm going to go to 2% on this one. Just don't know why is it not showing percentage. Hate when this happens. All right, perfect. 2%. Position size, let's calculate what's 2% of $500, 5,000. So where's my calculator again? 5,000. 1% of 5,000 is equal to $50. So basically 2% is $100. Right. So $100. So for $100, our stop loss is 240 points. So there you go. That's the stop loss. Why is it not working? I don't know why I have to open on other screen. Sorry. So $100, 100 divided by 2,430 equal to 0.004 lots. That's where we're going to be looking. 0.004 lots, 0.04 lots. How big it's going to be. And then take profit is already there, stop loss is already there, so we long, everything is good to go. And we put into 12, and then everything to this side. That is perfect. Nice. All right, good. This one as well, and we put all to this side, besides this one. And now we take a screenshot of this, and we add into the comments. So take a screenshot. And we come to comment, and then we paste here, and we just do a bit bigger. Perfect. All right. Very good. All right, so that's pretty much it. We have another trade right there. GBP JPY long. Let's move on. Let's go for the next one. Euro JPY. As we have exposure on JPY already, we're not going to be looking at JPY pairs anymore. Maybe New Zealand dollar. But let's have a look at New Zealand dollar. NZUSD. Oopsie. NZUSD saying long to us, isn't it? Yeah, NZUSD is long. So let me have a look at that. I wouldn't say it's a good trade because we're going very, very against the trend. Maybe just to take, a small pullback to somewhere here. So I wouldn't be looking to trade NZUSD on this really downtrend right now. And couple with fundamentals, just trying to get some fundamentals on the way. It's not the best time to be looking to long New Zealand dollar against the US dollar. Euro Aussie, let's have a look. Euro Aussie long. Sorry guys. Euro Aussie. Euro Aussie long. Let's have a look. Euro is very bad at the moment. Yes, not at the best time. Okay, most consolidated. So I'm not looking to trade Euro Aussie as well. Maybe pound dollar is neutral, nothing happening. USD CAD, nothing happening. Aussie JPY, no. Aussie dollar bearish. Okay, that's really interesting. Australian dollar against US dollar short. Let's have a look. AUD USD. That is looking good for me. Okay, that looks very good. Downtrend. Market is coming for a pullback. Maybe we should wait a little bit more, but let's have a look here on the Fibonacci retracement. Yeah, right now on 38. So we should wait until next week maybe to have this move up, and then we should be looking to short here. What I will do is I will place a 50% sell There we go. I will place a 50 at this level here somewhere. I will place a sell side, sell limit, sorry. We'll place a sell limit on Aussie dollar at the price of 65. Let's have a look. 65, 660. 65, 660. All right, so that's where we're going to be looking. So short. And then the entry price. Yep. It says there's a 0 in the beginning. It doesn't show 0, but that's fine. Aussie dollar. The date the same. And then we're going to be looking at 2% risk as well. Oh, actually, yeah, 2% risk. Position size. It's going to be, now we're going to have to understand it. So as there's a tricky thing here, right? Using ATR. Using ATR you can use for present value, but you can't use to forward value, okay? So that means that if we want to place a sell limit, we can't use today's average true range to determine if it's going to be the same as the futures true range. So what we have to wait is we have to wait this position to get triggered, and or soon as to get triggered, we see how big this will be, and then we can enter, close the position and enter into the market manually. So, but it's here, it's pending. All right, let me put into short pending. Okay. Pending. Okay. So I think that should be it as well. Now we wait, okay, but we take a screenshot, of course. Aussie dollar. Perfect. Okay. Just put it a bit bigger. Cool, cool, cool. Done. Next one, euro dollar short. There's definitely opportunity. I would be waiting a little bit more, but yes. Aussie JPY, no. Pound as well. We already have pound. Euro pound. Euro pound, we already short. Aussie CAD and New Zealand dollar JPY. Look, I think these are the trades we should have in the portfolio at the moment, those two. And this one is the pending. Okay, we're still pending. So Euro JPY, Euro GBP short and GBP, GBP. GBP JPY. GBP JPY short as long. And we have the prices, the take profit, stop loss for everything. And that should be it. So at the moment, we have 4% exposure of the portfolio. So basically, if we lose both of those trades, all right, if both of those trades actually come to hit stop loss, we're going to be in a loss of $200 because 2% of 5,000 is $100, and then another $100, so $200. And this one is pending, so we're not counting this one because maybe the market can't even reach at this level on Aussie dollar and then just continue to go lower. Okay. Does anyone have questions around that? So I think these are the trades. Looking at what we got on the market sentiment here, these are pretty much the trades. So it is looking that we're going to be having one trade per week, most likely one trade per week, or maybe two trades per week, just depending on how the market fluctuations are, okay, and how the portfolio exposure is as well. That's actually something I want to talk very briefly, but just to give some sort of how can I say that, some sort of introduction. Portfolio exposure. Okay, so risk is if you're putting that money, you already have to consider that money being lost. Okay, so that's the risk of being trading, and having it as a lost money, you know, thinking about as a lost money, this is, we call this the exposure of your portfolio. So your portfolio is exposed at 4%. So you could be at drawdown to 4%. So your equity could be going down all the way to, in this case, $4,800, because $200 is equal to 4% of 5,000. Okay, so that means, you know, so that means that you have to take in account of how much exposure do you want to have in the market as well. If you're feeling that this is too much exposure, go to less than that. Go to a 1% exposure, but your reward will be half as well. Okay. Okay. Satish says, I think GBP/JPY is long because UK CPI are also going to be high. Yes, maybe getting out of the negative scenario and coming to a positive scenario. Aditya say Euro dollar and GBP USD is consolidating, thinking to add positions. Yes, I agree. Oh, sorry. I agree with you, Aditya. Now, the last topic of today is the checking some fundamentals. Let's have a look at the economic calendar. So tools, economic calendar. Let me select all. Let me send this to everyone on the chat. So you guys have the link for the economic calendar right at the chat if you want to have a look at. But pretty much for this week, from today onwards, tomorrow we're going to be having some Canada inflation. All right. Well, not tomorrow, like in a few hours, so 11 midnight, midnight 30, as well as Japan exports. But most important is, because we have exposure on GBP at the moment, this is what we're going to be having to look at 6 p.m. tomorrow. Germany PPI, as well as the inflation rate for UK. They're expected to come some way higher, okay? But the core inflation is expected to come lower. The German PPI comes in better than this, or trade is going to be really, really good. Thursday, we have a lot of speeches, but nothing much on data. And then on Fridays, where we're going to get some sort of volatility for all trades. We're going to have GDP, we're going to have retail sales as well. If retail sales come higher for UK, definitely we're going to have some positive outlooks for all long GBP. Services PMI, yeah, PMI, lots of PMIs as well. And then Eurozone PMIs as well, and UK PMIs as well. And then on Saturday, pretty much just retail sales for Canada, and services and composed PMI for manufacturing PMI for USA. So that's pretty much it for today. So we had a look at the reviewing strategy. What are the opportunities on the market? We've detected the GBP/JPY long opportunity. And we had a look at the fundamentals as well. Very simple, okay? I want to keep things simple as possible, all right? So as we don't know the position size yet, just gonna do this. Yeah. And that's pretty much it. All right, guys. Thank you so much. I see everyone back on tomorrow from 5 to 6 p.m. And then next Wednesday as well, same thing. So every Wednesday will be the trading, and then Tuesday and Thursday as normal. All right, guys, thank you so much. Have a great day, great trades. Take care, use risk management, and I'll see you tomorrow. See you guys. Bye-bye.